Hello and welcome to our webinar on this UN Day for the Eradication of Poverty. responsAbility is a leading impact asset manager, specializing in private market investments across three investment themes: financial inclusion, which is very pertinent for today, but also climate finance and sustainable food. For now, I'd like to invite Robert Widén. He's joining from our offices in Sweden to introduce you to the panel today. Over to you, Robert.
Thank you, Rachel, for that introduction. To start off, I'd like to welcome everyone who is listening in today. Today marks an important day, United Nations International Day for the Eradication of Poverty. So again, thank you for joining us in exploring what role financial inclusion can play in alleviating poverty. To help us tackle today's topic, we're very fortunate to have a remarkable panel. And I'm really excited to pick their brains today. But before we introduce the panel, I would like to involve everyone who's listening in and invite you to answer a question to test your knowledge on the topic of financial inclusion. So if everything should be working here, we should get a poll question coming up. I think there we see it. So the question is, how many people in the world today are unbanked or do not have access to financial services? And you have a couple of choices there, please choose only one. Now, whilst we wait for the audience to answer, I thought I'd introduce today's esteemed panel of experts. First, we welcome Elina, Scheja, the Chief Economist of the Swedish International Development Corporation Agency, or in short, SIDA. Elina leads SIDA analytical efforts at the country level, focusing on improving analysis, financing for development, and the green transition, which makes her insights particularly relevant in today's discussion. Additionally, Elina co-chairs the OECD DAC Community of Practice on Poverty and worked as a senior specialist in employment and poverty diagnostics in the International Labour Organization at ILO. She also worked at the World Bank. That is quite the resume, and we're so glad to have you here today, Elina.
Good to be here.
Thank you. We also have our very own Paul Hailey. He is Head of Impact and ESG at responsAbility. Paul manages and measures the impact of responsAbility's initiatives. As the lead author of the responsAbility Impact Report and other publications, he brings a wealth of knowledge in impact investing. Furthermore, and I've gotten this confirmed by his students, Paul is a very popular guest lecturer on impact investing and sustainability at HEC in Paris. It's a pleasure to have you with us today.
Likewise, thank you very much for having me.
Thank you, Paul. And finally, we have Dibyajyoti Pattanaik, executive from one of India's leading microfinance institutions, Annapurna Finance. Dibyajyoti is an expert in microfinance. With over 50 years in the field, his leadership roles in organizations like the Microfinance Institution Network and the Orissa Association of Financial Inclusions demonstrates his deep commitment to advancing financial inclusion. He has significantly contributed to the transformation of Annapurna Finance, now one of India's leading microfinance institutions with more than 1,200 branches across India. It's so great to have you with us today, and you must for sure know the answer to the question which I asked the listeners, but you don't have to respond to that. So let's see some results if we have some. Actually, I mean, to be fair, it's not an easy question, but I'm surprised how many actually answered correctly. The most recent data estimates that around 1.4 billion adults worldwide are unbanked, meaning they do not have access to basic financial services such as a bank account. This is a quite staggering number, but with that said, let's begin. Elina, given your impressive background, as we all heard, experience on the topic of poverty, also you being an economist, perhaps set the scene for today's topic.
Would be happy to do that. In the bigger scheme of things are not looking that bad. We're coming out of an era of historically rapid poverty reduction. And over the past 30 years, hundreds of millions of people have managed to escape extreme poverty. The rate of poverty reduction has been as high as 1 percentage points per year, which is huge. That is unique in our history and something to celebrate. However, in the more recent history, the pace of poverty reduction has pretty much stalled. And during the pandemic, we experienced a historic increase in the poverty figures. The increase wasn't historic because it was particularly big. It was historic because it happened. We haven't seen a reversal in these trends before, and we also got a healthy reminder of how fragile the situation still is and how millions of people are just above the very low level of extreme poverty. So we're not out of the woods yet. Today we have caught up with that increase in poverty, and we're now back on a more declining trends in poverty. But that trend is very, very much plateauing. And even today, there are almost 700 million people living in extreme income poverty. On top of that, we know that poverty is more than income. If we look at the face of poverty and people's entitlements to basic education, health, decent living standards, we know that still almost 1.1 billion people are living in multidimensional poverty, as measured by the UN's Multidimensional Poverty Index. So the situation today is more complex. We know that the people who are left in extreme poverty after the rapid decline are facing a more complex environment and more diverse challenges. People who are living in poverty are most vulnerable to the adverse effects of climate change. They are increasingly living in conflict and fragile contexts. And the rapid economic development that was able to create productive jobs and create pathways out of poverty in the 90s is slowing down. And it's not being that generator of poverty reduction today. So if I would sum it up, when we take stock of the development today, we can celebrate the historically low levels of poverty, but also acknowledging the massive challenges that we still have ahead of us to get where we want to be, which is a world free from poverty in all its forms by 2030.
Thank you for that answer. I mean, although it's great that we're historically low, it still seems like we have a lot of work to do. Now, if we try to look a bit ahead, I would like to you to answer a question. But before you answer the question, I would like to involve the audience and see their response. So we can get up a poll here. You all see the question. Will we reach SDG 1 by 2030? So for everyone not knowing what SDG 1 is, that is goal 1 of the SDGs, and end poverty in all its forms everywhere. So let's see, we have some results already. Yeah. It seems to, I mean, there's some optimists, but most and pessimists or realists, perhaps one could say. I mean, Elina, if I ask you to answer that question, can we achieve SDG 1 by 2030? What's your response?
Unfortunately, the audience is right. If we look at the current projections, from today's slightly less than 700 million, we're expected to be at around somewhat more than 600 million people still living in poverty in 2030. So not much progress until 2030 is projected, and continuing the way we've been working is not going to get us there.
I mean, that doesn't sound too great. And I mean, let me rephrase the question. What will need to happen for us to get there? If you perhaps could comment on that.
Happy to, and also prefer that positive and proactive attitude. A lot can be done and a lot can change. But as I was, as I was discussing earlier, we are facing a more complex set of challenges, and in order to reach the last mile of poverty reduction, we need to get better at understanding these interrelated dimensions of poverty and tackle a broader set of constraints. So at the Swedish International Development Cooperation Agency, where we live, where I work, I've been working a lot lately.
I mean, you perhaps work and stay at the office as well. That's fine.
Trying to balance that out. Anyway, we do a multidimensional poverty analysis in the countries where we engage, where we want to identify the groups who are living in poverty and also look at what is the face of poverty in these contexts, look at what are the main problems and also find pathways out of poverty in order to get the biggest bang for the buck that we are investing in this context. So deciding context-specific solutions that work for the local circumstances is part of the answer. But even though the different countries require different solutions, they pretty much all boil down to creating enabling environment for people who are living in poverty to lift themselves out of poverty and ensuring that the institutional environment is supportive of those efforts. So if I could take financial inclusion as an example here, because this is the topic of today's seminar, what will need to happen is for us to ensure that people who are living in poverty have access to financial services that meet their needs in order for them to start a business, create jobs for themselves and others, get a savings account that can buffer against adverse shocks or get an insurance that could cover them in terms of shock. And here, a lot of progress has already been done. Even though the introductory question said that there's a lot of people who are still unbanked and not reached by financial inclusion, 3 out of 4 adults have a bank account or some kind of account in some kind of a financial institution, more so for men than for women. But what we also know is that many of these accounts are dormant, they're not frequently used, and they don't necessarily provide the kind of services that lead out of poverty. So I think the focus going forward will need to be ensuring that the financial inclusion actually delivers on the promise of poverty reduction and creates the services that are needed. So we need product development that leads to services that are affordable, acceptable, and available for the people who need them. And here we have already seen a lot of innovation in terms of during the digital revolution. Mobile banking has already increased access to financial services for many. The way of how that transfers are made, how mobile savings accounts are becoming more prevalent, and access also to insurance services to digitally incentivized and enabled services are examples of a more modern range of financial inclusion and financial services that better meets the needs and creates pathways out of poverty. So I would like to end on a positive note, despite the challenges, to say that we have the tools to do a proper diagnostics, and we are learning to juggle the current polycrisis environment in the world to find pathways out of poverty, and there are new innovations coming that help us along the way. But what we need to do is continue innovating and also keep our commitment to reach our goals. Even if we're not going to get there by 2030, we should strive to get there as soon as humanly possible.
Thank you for sharing that, Elina. I see Dibyajyoti, you're nodding as well, but I'll involve you later. And I'm glad to hear Elina's optimism. And I think I would actually take this moment to involve one of our other panelists. That's fine with you, Dibyajyoti. Paul, Elina, I mean, she covered the topic of financial inclusion, and you working at responsAbility. I would like to ask what role responsAbility plays in addressing financial inclusion in the developing world.
Sure. Well, thank you, Robert. Look, I think the point to make here is responsAbility is an intermediary in the sense that we are a specialist impact investor, which we manage funds that allow investors to invest in financial inclusion, which is part of impact investing as a whole. And impact investing is, of course, the idea of investing for both a financial return as well as for a positive environmental or social impact. So, in other words, what we're doing is we're taking investor funding and we are lending it to local financial institutions in emerging economies, who then use that money to cater to low-income households and SME banks. And of course, needless to say, there are in any country there is a financial sector of sorts. I think what we point to and what the previous numbers point to is the fact that, of course, when you look at those people or businesses that are typically excluded from access to finance, it's normally, of course, the bottom 60 to 80% of a country. So whatever financial sector is in place tends to cater to the easiest clients to cater to, which is to say the richest people, the biggest businesses. So, and this, of course, it's one way of operating, but as we mentioned before, if financial inclusion is going to have an effect, it's got to reach out beyond that. And so hence the fact that we would seek to target those kind of organizations. But I think taking a step back for a second, financial inclusion, as it's a very important topic. But of course, as Elina was pointing out, with discussion of the multidimensional element of poverty, it's just one topic among many. So it's one channel by which we can seek to improve income levels. We can seek to improve quality of life. And of course, as I think Elina pointed to as well, it covers a lot of different areas, financial inclusion. So if we're going to reach a lot of people, it has to be part of a holistic whole. Financial inclusion has to be about building local infrastructure, improving regulation, building credit bureaus. But within that, of course, there is a very crucial role to play by the financial institutions themselves, those that we know are willing to cater to low-income households and small businesses. So therefore, there is a role to play for the investors who are willing to come in and fund and finance those organizations, because ultimately, in order to reach out to more people, which is the whole point of financial inclusion, to reach out to more people, to more businesses, those organizations are going to need funding to scale up. And that is where organizations like responsAbility come in. We help them to scale up effectively. Now, of course, one might argue at this point, well, what exactly then, when we talk about the benefits of this, well, why though? Why low-income households? Why SMEs? Is that definitively the path by which we can seek to address financial inclusion? And the answer is, well, yes, frankly, it is something that's critical. You mentioned before that I think a lot of the people in the poll actually really weren't far off, in the sense that if you'd asked us about 5 or 6 years ago, the number of people who were excluded from from access to finance was 1.7 billion. It's now gone down to 1.4 billion. But it's still an extraordinarily high number, and it's very persistent in a lot of places, despite the promises of technology and other things. If you look at small businesses as well, that might not seem, you might think to yourself, well, then just cater to the biggest businesses. But in an emerging market context, small businesses are the biggest drivers of growth. They are responsible for between 75 to 90% of new jobs created in emerging markets. So these are essential engines of growth. And so it's important for an organization like responsAbility then to really try to seek to support financial institutions that really target those groups. And that's what we would try to do. It is, it's not a flash in the pan kind of thing. This is an industry that's been in place for the best part of the last 2 decades. And it's one that's still growing quite a lot as well. I mean, impact investing as a whole is growing very rapidly. There is a recent GIN survey that showed a 14% compound annual growth rate in impact investing over the last 5 years. And financial inclusion is one of the biggest themes within impact investing. So there is a big demand in terms of the challenge that is out there. If we're going to address financial inclusion, if we're going to address its role in poverty alleviation, but at the same time, there is clearly a demand for investors as well. And now with organizations like responsAbility, we are able to create financial solutions that allow investors to really have a direct effect on this. One of the advantages of what we do, and what I'm able to do when I'm standing up and talking in front of investors or in a webinar like this, is that I am able to say, well, look, when people are investing in our funds or the funds of other organizations that do what we do as well, they're able to draw a direct line. You have someone who is starting off putting their, an everyday investor putting their money into one of the funds that we operate. The money goes into the fund. The fund lends it to directly to a financial institution, and that financial institution lends it out to someone. So you can draw a direct line, straight line, from someone who's investing to someone who runs a market stall in Mumbai, or who runs a bakery in Quito, or who is trying to start a small business in Nairobi. So this is really what we try to do. And of course, it requires us to really look very closely at these institutions to ensure that they are really doing what we say, what we want them to do. But ultimately, that's the idea behind what responsAbility does.
Yeah. Thank you, Paul. I mean, you draw out the chain really of the financial inclusion, but you also mentioned that we have to monitor this very closely. And I would like to challenge you a bit as well. I mean, what do you see as some of the challenges for financial inclusion, and how does responsAbility tackle them?
It's a very good question. Look, I would say there are two types of issue here. The first is logistical, which is to say that to do what we do, there are logistical challenges in the sense that you have to, we can't click on a button and just do an investment like that, right? This isn't in a secondary market. By and large, we're operating, if you want to operate in countries where the need is greatest, that means you have to go out to countries where there is relatively little capital flowing into those countries, which means that those are countries that don't have capital markets. So hence the fact that we are doing private debt and private equity for the most part. That means that we have to go out and see the organizations ourselves. We have to do a due diligence ourselves. We have to directly interact with them. That brings certain advantages for me in my role, of course, because that means we're directly in touch with these organizations. I don't have to rely on a third-party data provider. I can go straight to the organization and say, look, I want an answer to this question. Can you elaborate on this more? It means we can engage directly with the organizations as well. Nonetheless, there is a logistical element to this. And then when we're looking for the data that we need for impact and ESG analysis, it means that we have to gather that directly from the institution. We can't, again, this isn't something that's available just, from a platform somewhere. So there is that logistical element. There is, I think, more of a, what is the right word here? I would say not exactly ethical, but there is a duty of care that you have as an investor. We have a duty of care in the sense that we all know from our own experience and from growing up and from, that when financial institutions go wrong, the consequences can be really quite damaging for individuals that are affected, but also for societies as well, and economies too. So we have a real duty of care as an investor that when we are doing this analysis, we are looking and this is often in a context where perhaps the regulatory framework isn't quite up to the standards that we would necessarily expect in Europe or in parts of the developed world. So we have a duty of care to really check that these organizations have strong governance structures. We have to check that they are treating their staff correctly. We have to check, especially above all, that they are lending responsibly to people who often don't have that much experience of dealing with a financial institution, that they are transparent about fees, that they are transparent about the interest rates being paid, that they treat their data correctly, that when they are trying to recover a debt, they do so in a way that is responsible and ethical, and not placing undue pressure on end clients. And this is something that is certainly in the area of financial inclusion investing. It is a topic that is absolutely core to what we do, and it has to be absolutely central if we're going to do this correctly, and if we're going to fulfill what is ultimately the wish of our investors, which is to do this in a way that has a positive effect and which really doesn't do anything negative.
Thank you, Paul. Very, very important answer, and thank you for clarifying that. And I believe this would be a great bridge to you, Dibyajyoti. I mean, you're on the ground in India, and you can give us real content to the context. So I would like to ask you a question. Would you say Annapurna would you say Annapurna, being a leading microfinance institution, that you play a role in alleviating poverty? And perhaps you can exemplify that.
Yeah, Robert, thank you for inviting me for this opportunity. Thanks to responsAbility. We at Annapurna Finance in India, we are a microfinance company serving close to 3 million households across the country. And I am a strong believer that financial inclusion is a most significant tool to take people out of poverty. And that's why Annapurna came into place, with that vision too, because we are from Odisha, which is again, poorer in terms of the geographical context in India. As Elina was telling you, I also agree with that, because the data says that for last decade, the reduction in poverty has multifold, at a CAGR of close to 16-17%, and in India also that's also we see that, and has gone down to 11%. But where we at Annapurna plays a role, the difference between people who are participating in a financial inclusion program or are more active into have access to the financial services vis-a-vis people who don't have. And we use this metrics to understand how people are at different level. People who are participating in the program and vis-a-vis people who are not participating in the program. And there's a big difference. In Odisha, we understood that people who are participating in program for the last 5 years have a significant income, close to 14% higher income vis-a-vis the non-participating clientele, while the out of poverty program is fueled by different government initiatives, different other large programs, but we are also significantly contributing to that. Access to different assets like upper house, surf water, toilets, very significant. Like the participating people have 99% of them have now toilets because we fund that. Or close to 47-48% people have access to clean water, vis-a-vis 22-23% people having that in normal. So it's a significant difference that we have created by just bringing one single product, that's financial inclusion, and that has also a significant impact in people's life, their quality of life, whether their access to education, access to healthcare, savings, their interaction with the banking services, insurance services. These are all significantly different when they have more mature and they are more have experienced this financial inclusion and the financial literacy programs vis-a-vis the people who do not have. Well, in general, people are getting much more access, but they have a very, very significant change, in that context. The access to mobile phones, it has also a very significant change in terms of people with non-access or availability of the program to the people who have availability of the program. So when we are talking about poverty, it's not about the income only. It's also about your ability to access the facilities that are required to build your life and quality of life. This is very significant, whether you have a better house, whether you have good connection, and they all result into better health. You're spending more on education, you're spending more on asset building, man health. When we are talking about financial inclusion, Robert, it is also about the insurances. It is also about their savings, their capital. So we also try and understand how the people that Annapurna serves are behaving differently, or than the people who we are not serving. So we continuously do the research to understand how we have been doing that, and it's purely data-driven matrices, which also tells, and also supplemented by different program, research programs of large-scale research programs of the government, which also tells the story the same, like people who have access to financial inclusion or a bank account, insurance, or a financial service provider like us have a better chances to come out of poverty and have a better chances to create, like for example, the women participation in economic activity. Now that has a significant change, because we are largely being a microfinance institution, provide loans to women to start a business, and that has significant difference between people who otherwise would have access to that front. So that's how So I strongly believe that while extreme poverty is a challenge, was Elina was directly pointing out, and I agree with her on that. Because we probably will not be able to reach out to that label, but there's a significant difference between people who, that financial inclusion program can bring in to people who would come from out of poverty, and then to remain there, because this is a very at the bottom of the pyramid. These people are also very prone to any kind of small change, in their lifestyle could actually take them back to poverty again. I think Elina and Paul have already told exactly about that they could go back. So you have to continue to keep your focus and keep helping them, putting things at the right place for them to keep growing. And the data is Nordics are we saw close to 1 million household, and we have seen that difference happening.
Well, I mean, this is really inspiring to hear. It's really with joy to follow Annapurna and what you do. I mean, that is also historically. I mean, we've heard Elina and Paul talk about growth and digitalization. So we try to be a bit more forward-looking. That's okay. Microfinance still seems to be a topic that is based on group lending, banking in branches, and other approaches that have mostly died out in the developed world. I mean, where most people bank online. Is that likely to happen in developing countries as well? Will this sector continue to evolve as it has before with the growth we see? And perhaps if you could put Annapurna in that context, I mean, where will you be in 10 years' time?
Well, Robert, as you correctly mentioned, one is digitization for sure, the mature market of microfinance. That's the second one. And the third one is the climate risk, which we are now experiencing everywhere, not just confined to my state or my country, everywhere across the globe. I think these are going to be very significant differentiator, both way, taking this whole community either out of poverty or bringing back to the poverty, because there's a risk of this climate change could actually create a huge problem in terms of the changing livelihood, the digital divide, people who are not participating in this digital journey, because you're moving everything to digital. And then there's a large section of people who would be left behind. So I think Annapurna is going to play a very significant role, both in creating a safe net to the changing requirement of this climate risks that are available, where whether to adopt give finance to the adoption or to the mitigation, and simultaneously bring the whole set of people that Annapurna works with to the digital marketplace to participate again. Otherwise, so what happens, what changed from the poverty to non-poverty today, or promote from that place to the is the participation in the financial services, which was not there. That role we played for last 10 years. Now, I think the next 10 years we will play a role where we will bring them to the digital world and also create safe nets for them where they will not again fall back, in case of this, the emerging challenge of this climate change, which is very, uncertain and extreme in many cases. And it is also defying all the standards, like of all 10 years data, everything that you have, they're all like one day it will rain, like every day or other you'll get news that for last 10 years we have not seen this. The data we have is of last 10 years or 15 years, but the magnitude on which things are changing is beyond that, and we don't have control over that. And this set of people, there's a large section of the people in my country and around the world, they are actually going to face a significant challenge, and we have to be there to solve those problems. And so I think next 10 years will be hyper personalized products, backed with highly tech-driven data analytics or real-time, analysis of the situation with, mapped with, satellite data and a lot of this machine learning and AI. I think this is going to be a whole new world out there, because the fight is going to be bigger from here. The fight against it's going to fight opponent that we're going to fight here. So we have to also bring a lot of that along with us. And Annapurna is going to be there playing.
Oh, wonderful. I mean, thank you for those insights. I mean, it's obviously hard to predict the future, but it really sounds that there's going to be some interesting developments in this sector. I mean, with that said, I'm looking at time as well. I think we want to involve the audience as well. As Rachel said in the beginning, we are open for questions. So if you want to ask some questions, unless you already have done so, please do so. And whilst we wait for the questions, I'd like to go back to Elina and Paul. I mean, would you like to comment on what DJ has said? Perhaps you have your own experiences. Elina, perhaps you want to go first.
Just eager to jump in.
Yes,
I was really...
You've been sidelined for a while now. I'm sorry for that, but it's we really want to hear your thoughts. Thank you.
I was listening with great interest of both the stories, and I really liked how you brought up the multidimensional nature of poverty from the viewpoint of financial inclusion. So if I was highlighting that we need to understand several and tackle several problems at the same time to solve the problem of poverty, it could be that one solution can tackle several problems. So with financial inclusion, you do get to the other dimensions of poverty as well. So very that. But then on your point about going forward and how the future will look like, also in terms of digital inclusion, I really think that we need to think about the full package here. Just the fact that the services exist doesn't mean that they reach everybody. Not everybody is financially or digitally literate, and not all the services are available in local languages that they would actually reach the last mile, and not everybody can afford the data traffic as well. So as Paul was saying, that it's not just investing, we need to create the channels in places where capital markets don't exist. It's the same thing for the digital services in order to close the digital divide. So if I can just throw in one recent example, we were working with another partner, GSMA. It's a global industry organization for mobile network operators. They had identified that 90% of the refugee population have problems buying SIM cards because they didn't have proper IDs on them, and that was a requirement for getting a SIM card. So they were excluded from these services, and the digital divide was getting wider. But initiating a dialogue and trying to overcome these structural and regulatory challenges to allow access, it's not a monetary investment, it's also seeing the whole package, have now enabled hundreds of thousands of people in Uganda, in the refugee population, to actually have access to these services. So looking at the bigger picture, find the keys going forward, there are plenty of these type of inspiring examples for everybody who want to jump on board on this train.
Thank you, Lee. I mean, that sounds fantastic, really, really on grassroots levels as well. I mean, I don't know if you want to add something to that, Paul. I'm looking at that time as well. Maybe...
Sure. I guess just very briefly, just as a small amount of context from our perspective. I mean, as Elina and Dibyajyoti have pointed out, I think it's very easy for us to forget the scale and the importance of what has happened here in terms of the number of people that are coming online right now. If you were to look at, say, what has happened between, say, about 2015 and where we will be in 2030, you're effectively having, if you take just India as one example, the rural population in India that are coming online due to mobile phones, it's more or less the size of most of the European Union that's coming online in the space of a pretty short period of time. So that's a colossal opportunity, especially in some of the more remote areas where that standard bricks and mortar approach to banking just isn't available, or it's very hard to make it work. Mobile phones offer a huge opportunity in that respect. And then in terms of what Dibyajyoti was saying about product innovation, it's not just, Annapurna has done extraordinary work in this respect, and also in terms of trying to really come up with tailored solutions. And that's an example of how financial inclusion can achieve that multi-dimensional effect. But it's also something that we're seeing mirrored across the various countries where we're invested. We are seeing also, financial institutions. We are seeing microfinance institutions and SME banks that are based in Tanzania, that are based in, Peru, that are based in Indonesia, that are similarly really branching out from that very standard credit-only, cookie-cutter group lending to a really broad variety of products, along the lines of savings, insurance, and everything else you can think of. And that's only to the benefit of the local communities. So I can say that there's a lot of evidence that we see in the position that we have, looking across a lot of different institutions, a lot of different countries, that really show this trend as well.
Yeah. Thank you, Paul. I'm looking at time and looking at the questions. I mean, they are mostly in terms of more case studies. So I think that's something we covered, and also on the topic of climate. Which we've also covered a bit, but I think that requires another session to actually go into that topic. But just to end things up, and I don't want to ignore the audience. If you could answer very briefly, each of you try to do a sentence. Have policies proven to be effective? Paul, you can start.
Well, I would say that
one sentence.
If we're talking on the level of regulation, good regulation can be beneficial and catalyzing, and can really do a lot to point funding in the right direction. But bad regulation can be just as damaging as badly run banks or financial services. So quality, good regulation is an important element, I would say. I don't know if that counts as one sentence.
No, Sure. It sounds as good as answer as any, really. I mean, it's a hard question to be short on. So, Elina or Dibyajyoti, do you want to?
Yeah, would happy to just quickly. It's quite often we have good policies that are not implemented. So implementation is really the missing middle here. And also when we were talking about the future and the digitalization, I think we need to keep up to speed with the changes so that regulation actually allows access to the new innovation that we get.
Thank you.
That's my 2 cents.
Wonderful.
I think the regulation plays a very critical role in any positive change to bring in. But I also agree that regulators takes a lot of time to bring that change to the market reality. So I think I agree with Helena that you have to really keep up with the change that's happening around. Otherwise, it's going to be difficult.
Thank you. All right. I mean, we already overstepped time, so thank you everyone who's still online. I mean, as we wrap up today's insightful discussion, I mean, I want to extend my heartfelt thank you to the panelists, Elina, Paul, and Dibyajyoti. Thank you for sharing your expertise and experience and taking the time. Also, of course, thank you, listeners. I mean, thank everyone who's participated today. Your engagement is so valued for this topic as we continue to explore and advocate on financial inclusion. And to end things off, I mean, please feel free to reach out or contact us through your typical contact details. Follow us on LinkedIn. There's great content there, or on YouTube as well. And finally, I would like to wish everyone a wonderful day. And let's continue working towards a world where everyone has the opportunity to thrive. Thank you, everyone.
Thank you.
Thank you.
Thank you.